everybody, and welcome to the Dash Trader Newsroom. This is Michael DeJoy, and today we're going to be talking about the markets. How low do we go? As I already mentioned, my name is Michael DeJoy. I'm the Director of Educational Services here at Dash Trader, and I'm joined by my co-host in the Nasdaq Market Center, Jill Malandrino. Jill, how are you?
Good, doing well. Thank you.
Good to be back in Midtown Manhattan, I'm sure. And as we've all heard and can certainly, we certainly see every single day as we go and purchase anything, inflation is raging at a 40-year high. When do rate hikes start to influence a reversal? So what are your thoughts on this raging inflationary problem?
You know, I think the challenge is that rate hikes can only do so much, and that there are real fundamental underliers, such as supply chain constraints, what's happening with inflation. We're seeing it in the mortgage market. We have geopolitics to worry about. There are so many different outliers that rates alone, I don't think, have the ability to make that reversal. I think if anything, it will take time to play out, and what will bring some of this inflation back down to more acceptable levels ultimately be demand destruction, right? You know, you can only spend so much on gas when taking those summer drives and vacations. It just becomes unaffordable. There'll come a point where people will switch from consumer brands to generic. And I think once we start to get that demand destruction, that's when you're going to see it start to normalize. I mean, same thing with the housing market as well. It just gets to a point where it becomes completely unaffordable. But until, and my concern here is those underlying factors when we think of inflation, supply chain, geopolitics, China opening back up. It's not something you switch a flip on. And it changes the undercurrents. I think this is a little bit of longer term work that the market and the economy has to work through.
Absolutely. I think that, you know, historically, at least from my in my old economics background, I think they said that rate hikes tend to have a 6 to 9 month lag time before they're affecting inflation. And that was really from the lessons learned 40 years ago from the Volcker rate hikes of the 1980s. So there's a 6 to 9 month lag time. And now that we've just raised rates now in the last two Fed meetings, that puts us at really still seeing inflation raising and increasing for the rest of the year, and probably not seeing it cool off at least until January, February, maybe the Christmas season, the holiday season at the end of this year might be the time that we start to see some effect on cooling down that inflation with, like you said, demand destruction.
Yeah. Well, I mean, think about it. We always talk about the market being a discounting mechanism. If we're looking at 6 to 9 months out, the volatility that we're seeing now suggests, you know, where we could potentially be, and it's going to be here for quite some time.
No doubt about it. Now, in other news, we had a stable coin, the UST stable coin, was meant to be pegged dollar for dollar to the US dollar, and it lost about 50% of its value overnight. This comes, you know, as Bitcoin and Ethereum are at their lows. What does this mean, in your opinion, for the cryptocurrency market as a whole?
You know, it's so interesting. When we think of cryptos, we always associate it with a store of value. How much money am I making in a trade? You know, where's my account right now? But I think what we really need to focus on is the underlying infrastructure that is building out financial services as we know it today. You know, we're seeing that all the time, the marriage between these newer fintech companies and legacy financial institutions that have the ability to scale, leveraging that type of technology. So while we get caught up in the headlines with, you know, what's happening with a specific coin or what's happening with crypto, the larger digital asset space is something that I don't think should be overlooked. I also think it's interesting, and I'm still trying to get the answer to this, that because we have seen such a significant increase in institutional adoption, we're seeing Bitcoin correlate more when it's a risk asset, just like equities are considered a risk asset, but because the institutional mindset is being utilized, you know, and levels are being bought and sold like they would with equities, if that's having an influence on it as well. It's kind of hard to tell in this market just because everything, you know, every asset is volatile. Bonds are down, equities are down, digital assets are down. So I'm wondering if more institutional participation, it could potentially influence those trading patterns, just because of the way their managed mandates are.
Yeah, absolutely. And I to me, in terms of the cryptocurrency market, certainly this is a one-off situation. We've had a couple of these other stable coins have similar problems in the past. I believe it was Tether that had some kind of an issue as to where the underlying assets were. There was supposed to be more assets there. But needless to say, I feel like cryptocurrencies are here to stay in some form or another, specifically Bitcoin and Ethereum. And the one thing that was a little disconcerting is I believe there was kind of like a very small mention inside of Coinbase's earnings report that Coinbase said that client assets could be at risk in the advent of a bankruptcy. And I know that was really, really off-putting, for many Coinbase investors, and certainly that's been reflected in the stock. But again, this is a process of that asset class developing, and you're certainly going to get these kind of scares in any kind of new and developing asset class.
Yeah, well, it's interesting though with the case of Coinbase or any of these exchanges. Part of the issue with that is that they will correlate to how the asset class is trading, which in a way is counterintuitive, right? Because like we saw in the March 2020 and April 2020 volatility and volume surge in the markets, it was great for exchanges, right? So I think it's also a matter of volume. For Coinbase, I also think that there was a big retail constituency, and we know what's happened with retail traders. They've kind of stepped back because the style of trading with buy the dip is obviously not working well. So I think because volumes have decreased in a core market for them, so I don't think it's necessarily tied to the digital asset space, but there also are the mechanics that traditional exchanges worry about when it comes to volume, competition, cost. So there is some of that in there too.
Yeah, and I mean, again, this was a small part of the overall earnings report of Coinbase, and everybody kind of latched onto that one little piece. So let's jump to the general sense of earnings season this season. What has been learned? What do we expect for the rest of the year and for the next 2 quarters? And certainly it seems like we got to get used to. It's the untransitory inflationary environment. We seem like we're going to be dealing with this high inflation environment for quite some time anyway. So what are your thoughts on earnings season overall and the rest of the year?
It's so funny because I think a couple of weeks ago, you and I were saying the only thing that was transitory about the whole thing was the use of the word transitory.
Exactly. Yes, right? You're right.
Because, even when we were using that word, I remember asking you, I'm like, Mike, raising wages is not a transitory thing. You don't add and detract, right? Yep. I think with earnings, the pattern was we saw companies make their quarter, but that was the first quarter, and their guidance going forward when these things are really hitting in April, May, June, how it's impacting cost, margins, and guidance. It's really hard to guide in an environment such as this. We saw what happened to companies that had no earnings, or they were their multiples were being predicated on 2028 projections. This is the time where quality companies that have product, that have cash flow, that can weather these environments, that's what's going to weed things out really quick. We saw a lot of the companies that came to market in 2020 and 2021 that were unprofitable and had no earnings, in many cases negative earnings. So I think that the market's being exceptionally choosy, and we know the macro undercurrents are going to be here for a while. So I think earnings are really going to count. And I think the next catalyst for the growth story will be earnings. So a little bit longer term out, but that's going to be reduces the market here, because we know we're not getting it from the Fed. There's that put is gone.
Yes, absolutely. I mean, it seems like I think Peloton really is the perfect example. I mean, it was an interesting idea. It was certainly a pandemic benefit. It benefited from the pandemic. It's an iPad attached to a exercise machine, and it certainly is a good idea, but at the same time, it kind of got overinflated during the pandemic situation, and then there's all kinds of other problems related to Peloton. But you also see many of these kind of digital concepts or digital ideas that got 5 years worth of growth in 2 years, over the course of the pandemic, and they have to come back to reality. I mean, the reality is that you got 5 years of digital transition in the course of 2 years. And then, of course, we have this this surge in inflation that really has a negative impact in companies such as Amazon, which have really thin margins. And when you start having inflation that's raising rapidly prices, there's no way for Amazon to pass that all through to the consumer. So there's this kind of combination of problems that the market had to adjust to. And I think it really took down a lot of the smaller cap stocks.
Right.
And the indexes are being held up by the big caps.
Okay, I'm glad you brought that up, because you get to a point where you have names like a Microsoft, like an Apple, down 20-30% on the year. That could potentially be, a generational 401k or IRA buy. These are companies that not only will be here and have fabulous balance sheets, cash, they have the margins, they continue to innovate as well. So it's not like they're, losing out to smaller companies. So when we think about the bargains now, companies like that, or what I would be interested in, but what gets really unique, Mike, is all these companies that are now trading, single digit prices. M&A is going to start to get really interesting as well.
Yeah, right? I think so. Acquisitions on the smaller companies being gobbled up by big companies with cash.
If you thought they were attractive at $100 and it's now trading at 10, and you have the cash, and you can acquire the technology instead of having to spend capex on building it out yourself, it gets really interesting. I mean, Peloton could be super interesting for companies that have health apps, and I can't talk about that working for Nasdaq, but it starts to get really interesting at some point for these technologies to get acquired.
I mean, a company such as Apple has over $1 trillion of cash on the books. I mean, that's a time for them to go shopping. I mean, it really is a big opportunity for a lot of the big tech companies like Apple and Microsoft that have billions of dollars of cash on the books. So it's a very, very interesting time indeed, and a very good point, Joe. Well, listen, Joe, that brings us to the announcing of our winners. I'm going to just announce the winners with you, and then I'll go into the details with them individually. But let's meet our winners. Our third place winner is Lazar. He was best 1003. Our second place winner was David, who I've actually done a couple of interviews with. I believe he is a YouTuber, and he's interviewed me a number of times for his Friendly Bear podcast. So pretty impressed that David pulled into second place, and he's one of our, participating YouTube Friendly Bear podcast guy who I've actually met a number of times talking about the DAS trading platform. So very, very big congratulations to David. And our first place winner, best 0996, Thong. So a big congratulations for our winner, Thong, best 0996. Awesome. So Jill, I don't know if you want to sign off now. I know you got a couple of other meetings that you got to jump on, but great to see you as always.
Yeah. All right, we'll talk in a couple of weeks. Take care, everyone.
All right.
See ya.
Take it easy, Jill. Bye-bye. All right, so I'm just going to go back real quick and go through the various different winners. So let's talk a little bit about Lazar. Lazar is an NOC engineer. He's originally from Serbia, but now lives in Malta. It's very common, of course, for engineers. Malta is a very big trading capital these days. His experience has been in trading for several years and is self-trained, but it actively follows the trading scene. His preparation before the market is open, he would go through the data and analyze a company's filings, look for red flags, i.e. higher cash burn rates, debt, potential dilution, etc. Mainly focused on short selling, overextended moves within the pharmaceutical companies, specifically in small caps. Tried to avoid one-day runners, wants to go for stocks that are running for multiple days. Mistakes, he did not let his winners work. He cut his profits too soon, didn't let his strategies develop, got out of trades too soon. This is a very, very common error for many new beginning traders. He learned that his initial focus was on following his strategies and to stick with his plan. During the whole competition, he had one negative day, and that day he broke one of his trading rules. So discipline and being consistent each day was absolutely key. Not to compete against the other competitors. He just kind of tried to do the best that he could possibly do for himself, which did when he tried to compete against the other competitors, he ended up over trading. And this is an important element. You don't want to overtrade. You want to try to stay away from over trading. Second place winner, which is David, who I've met, a very great guy. He's part of the Friendly Bear podcast trading community and trading fit girls trading community as well. Experience, he's learned from some of the best traders in the industry through podcast interviews. Preparation, learned more about DAS and went through the software in depth with me, yours truly. So his strategy was tried some long strategies and had fun with the competition, but didn't do anything fancy. Learned how to be more efficient using the DAS platform, and says the competition was fun to trade during his downtime midday to avoid over trading in his real accounts. Excellent advice from David as well. Look forward to talking to you soon, David. Our number one best trader, Thong Best 0996. Let's talk a little bit about Thong. Thong immigrated from Chin State, Myanmar, to Australia in 2015. And he's currently a university student. His experience, he's been in an active trading simulator for about 1 year. His preparation, sim trading with DAS, because for him, the best teacher is screen time and watching price action and reading the tape. Strategy, Thong used VWAP, volume weighted average price, as a support and resistance indicator. He usually shorts the ticker if the price is below VWAP, and long if price is above VWAP. So he's using VWAP as a directional indicator depending on its position with price. If price goes against him, he cuts his position quickly as possible. He made sure to keep his trades within a 3-to-1 risk reward ratio. Mistakes, most of his mistakes were not cutting losses quickly and hoping the price selection would come back in his favor. He learned to focus his trading behavior because in the competition, you see other traders and other traders see your results. And it became important to focus on his results and not to focus on what other traders are doing, not to win too big. At one point in the competition, he dropped from 9K to being in red in the P&L. He had a big reversal, but he managed to get it back together and stay disciplined because he aimed to win a little bit too big. He wanted to have a really wide margin, but he pulled it together after a big loss. And look, being able to pull it together is a very, very important thing as a trader. Sometimes you go a little bit on tilt and you're focusing on something wrong. I made a big mention about streaking. When you're trying to focus too much on a streak and it becomes more important than your P&L. Your P&L is key, discipline is key, and the streak, 10 green days in a row, is not so important if it leads to a big bad red day. All right, so let's congratulations to all of our winners. Stay informed about all things DAS and all things number one best trader. You can follow us at onebesttrader.com and One Best Trader on Twitter, Facebook, and Instagram. Let's jump to our market analysis. Just give me 1 second here as all right, so here's my DAS trader. Hopefully everybody's seeing my DAS trader now. I'm just gonna extend out this daily chart. We're gonna make, this is the daily on the S&P. And really, I mean, the technicals this time around are super, super interesting. I mean, I've been talking about this head and shoulders break for some time. Let's just make this a little bit smaller so that it's not at the edge of the screen. So let's just draw what I would call a neckline break on the S&P. This is a horizontal line. So this was the neckline on this head and shoulders pattern. And to just illustrate what we got going on here, I'm going to just put a rectangle here. So this would be shoulder one. This would be our head. This is our head here. Okay. And then we have shoulder two. And as you can see, we broke our neckline. Okay. So we broke our neckline. There it is. There's the break. And really, we've done nothing but stay down. I mean, we have yet to bounce effectively. In fact, if you look at the intraday today is Tuesday. I mean, Wednesday, May 11th. And you can see that we are at the lows of the day. The market has not dropped considerably, but we have not bounced. And I'd say that this is from absence of buying. So the buy the dip crowd has effectively bought the dip until they can't buy it anymore. And now they're staying and waiting on the sidelines. And the market has gotten exceedingly bearish and stayed exceedingly bearish. And so far, we go through, regardless of what market you look at, I have not seen any indication that the market is ready to bounce. Now, we did get a 2-day consolidation here, and then we did not get a bounce. So the absence of that bounce, we're oversold, and we can get more oversold, and we can even get more oversold. But I do think that probably somewhere in the area of 290 even. So let's just go back to the QQQ daily. I'm going to actually go to the weekly. You can see it a little bit better. I mean, this is 300 is a natural level of support. We've been down for 1, 2, 3, 4, 5, 6 weeks. Chances are, well, last time when we started the sell-off, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks down. Certainly the size of this move, if we look at this from using this, the rectangle, if we look at the size of this move down, and we know the measured move concept, we are pretty much near a measured move. We're not quite there yet, but at 290 even on the QQQ, we hit the level of a measured move down. So somewhere in this area is where we have some natural levels of support developing on the S&P and on the QQQ. Now let's take a look at the DIA. The DIA is a slightly different story. It was a little bit more resilient than the Nasdaq and the S&P, but now it is certainly joined the sell-off, and I call it the sell festa. And certainly the sell-off, we broke support at 322 on the DIA, and we continue to trend downward. Either way, we'll see if this trend continues. We are deeply oversold. Markets at very, very deeply oversold values become much more volatile and have a tendency to swing back and forth, which means that we'll continue to sell down, but then we may have some big up days like you see here in this up week here. Let's take a look at the daily chart. You can see that when you have up days, they tend to be very, very big green up days, like this one here, like this one there, the green one right before the sell-off. The Dow selling is a little bit less pronounced, and we did just recently break the last support level from the February lows. So in the Dow, things are a little bit less pivotal. GBTC, this is Bitcoin tracking ETF. This is a very, very scary chart to me. Very bearish. It's a little harder to see where the bottom might be on Bitcoin ETF, but in Bitcoin, the actual underlying asset, probably somewhere in the area of 20,000, 22,000, somewhere in that area. On Ethereum, probably around 2,000. So this is the chart of Ethereum, ETHE. This is the chart of Ethereum. So certainly Ethereum and Bitcoin and cryptocurrencies in general under pressure. It seems like the algorithms are trading Bitcoin, Ethereum with technology stocks, and that has really, really had a very big negative impact on cryptocurrencies in general. Let's take a look at some of the big cap stocks like Apple. Apple breaking key support here. This has really led, Apple has led the sell-off today and in the last couple of days, because Apple had been very resilient. And you can see that Apple pretty much remained in an uptrend. And I'm just going to draw the trend line. Okay, so let's just say that's the trend line. And that trend line broke. So usually on the break of the trend line, we will get a snap back to the trend line, but then look out because, this is a very, very, this is a short-term, trend line break, leads to a trend line fade. The trend line has broken on Apple. Let's take a look at MSFT, Microsoft, another big name. It's the exact same story all over again. So you have Microsoft. So there's Microsoft. There's the trend line break. There was another earlier trend line break, from this trend line that braked and faded. But needless to say, you have a trend line break on Microsoft, a head and shoulders pattern on Microsoft. This is a neckline break as well on the head and shoulders on Microsoft. So now what's bringing and leading the markets down is the break of the trend lines on the big cap stocks that were holding the market up. The small cap stocks broke first. Now the big cap stocks are breaking down accordingly. Now, with all this being said, you can look at things like USL, which represents the 12-month oil contract. And when you look at USL, this is a bull flag. I mean, this is a bull pennant or bull flag, and probably is going to go way higher. You could look at UNG, which is natural gas. Also a consolidation near the high. We can look at gold, GLD, pulling back, but certainly having an update today and certainly not in a downtrend, although it is off its highs quite considerably. SLV, which represents silver, not doing as favorably as gold, but like we've said many times before, silver does better than gold in good times and worse than gold in bad times. And silver is not as direct of a hedge against inflation as gold is. Let's look at other stocks that are doing well. I believe MOS, which is Mosaic, certainly off its highs, but in an uptrend. So there's plenty of stocks that are still in uptrends. Let's see, VZ, which is not doing well. So let's cancel that one. Certainly trading down and trending down with the markets. But certainly there are plenty of stocks that are in the food, fertilizer, farming, supermarket space that are doing better than the broader market. So those defensive sectors are still faring fairly well. And you need to certainly trade carefully. The volatility is high. And speaking of volatility, look at the VXX. This is the VIX. VIX has certainly been bouncing around here at the 24 to 29 level in the last couple of weeks, even with a spike up to 41 on the big breakdown day. The UVXY, which is the 2 times inverse VIX, also trading in that kind of volatile range between $12 and we're now consolidated near the $18 to $19 range. So let's jump back to our slideshow presentation and say our farewells. All right, let's just jump over to here. All right, stay up to date with all things DAS by signing up for our monthly newsletter, which, by the way, I have to point out that we have been spot on with most of our analysis here at DAS in our monthly newsletter, talking about caution and an asset bubble and a possible recession and maybe even getting worse into the depression, dare I say, the depression area. Simply fill out all the forms at the bottom of our webpage at www.dastrader.com. Subscribe to our YouTube channel, Dash Trader TV, and for the DAS Newsroom reminders. Follow us on social media at Dash Trader. You can follow us on LinkedIn, Twitter, and Facebook, and as well as Instagram. Thank you, everybody, very much for joining us, and a big congratulations to all of our winners. And to next time in the next competition, and see you all in 2 weeks. Michael DeGioia signing off. Trade well, everybody.